Okay, hello traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, October 25th. Michael Boutros here with you this morning. Pete, Iman, Peter, Rizwan, Tom's in the house today. Great to be with you guys this morning, and a busy docket. Okay, we have a lot to go over today, so I want to move at a pretty brisk pace. Obviously, major headlines that we'll be going over is we got the Aussie CPI data overnight, which was weaker than expected across the board. Aussie worst performer heading into the U.S. session. We also got GDP data out of the UK, which beat and topped expectations. That saw the pound give us the strongest positioning versus the dollar heading into the U.S. Open. Obviously, later today, after the open of U.S. trade, we do get the Bank of Canada interest rate decision. No changes expected there, but certainly dollar CAD stretching into a near-term resistance target in overnight trade. We'll be going over today a quick review of the index again. Dollar CAD obviously ahead of the BOC. Kiwi has continued to pan out pretty well. It broke even lower. Didn't give us any type of rebound to get back in, at least personally, but the decline still coming into the subsequent support targets. So focus remains lower there. Dollar yen stretching a bit higher, but holding slope resistance. So we'll take a look at that. Pound yen, amazing topside breach. Pound Aussie, massive run today. Strongest performer in general. Okay, pound strongest, Aussie weakest. Pound Oz off to the races, and that's also been something we've been tracking since earlier this week. I do want to just touch base on dollar peso. I know we talked about that yesterday. It's still holding that resistance, stretch a bit higher, but it's there right now. Crude, Aussie dollar turning lower, looking real nice. Dollar Swiss, gold, euro, and euro yen. So it's a long list today. If you heard or if you didn't hear a pair that you're looking at that you'd like to review, or if you have any questions at any point throughout the session, always feel free to drop the message on the chat box. All right, let's jump right in. So a quick look, real quick. You guys have seen this chart a million times. There's not really much to say. Range for the dollar index. Still, focus for the week is on this 93.86 threshold. We're trading there right now. That is the low week and low day reversal close for 2016. Also converges on the median line. We've been talking about this resistance for the last couple of weeks now. If we were to topside break, the initial objective would take you into this parallel. Again, on the weekly charts, just keeping things in perspective, that gives us free reign for up to 95, 94, 90s. Not my favorite scenario. I kind of want to see this hold right here, but that is the contingency plan as we continue to probe resistance. So the weekly close will be paramount here on the index. Here's what it looks like on the daily chart. Again, the significance of that level continuing to be highlighted by the 100-day moving average, 236 retracement, former August swing highs. It's all loaded up right there, right alongside the monthly opening range highs. So any way you slice it, you're basically looking at resistance here still. Topside breach, again, there's that median line, longer term trend line for 2011, just below the 95 handle. So levels remain exceptionally clean. Here's what it looks like on the intraday charts. The weekly opening range is really cleanly taking shape below this cluster of resistance targets that we've been talking about. The weekly opening range was exactly at the 618 retracement. Continues to be a decent pivot. That now converges heading into tonight, heading into Asia, right on that near-term lower parallel. So break below that's really what would open a little bit more of a downside push here in the greenback. Okay, any long exposure you have, you still need to be mindful of this 94, 94.20 region. It's just littered with resistance levels, moving averages, longer term slope. I mean, it's just a region you want to be mindful of. So even if we were to get a near term bump in price, or if you get a long signal here on intraday, I wouldn't be targeting anything outside of 94.20. Let's just say that. Questions on the dollar index. Obviously, always keep in mind, it's still very important, guys, heading to the close of the week. We still get the bulk of U.S. event risk on Friday with the third quarter GDP figures. Their first release for third quarter. They're expected to be significantly weaker than the second. And certainly that core PCE, that Fed's preferred gauge of inflation, is kind of going to be the focus here. No interest rate is expected. No change to rates are expected rather next month. It's really all still set for December. So markets aggressively pricing in a December hike still. Any questions on the index before we move off? It's pretty much the same setup, guys. We highlighted these levels on the 23rd. So no change to any of the intraday levels. In fact, that near-term support that we highlighted, 93.69, ended up being the exact monthly opening range low. Brings it to 120. Okay, so no change to any of those levels. All right, DXY, that's number one in the books. Moving along to last night's update, let's go quickly in order. Here's dollar CAD ahead of the BOC. We looked at this weekly chart multiple times and noted that the break on the weekly chart and specifically last week's closed has really, it suggests that there's more upside to go. Okay, as a multi-year trendline support, the downside break should have seen way more acceleration than we saw. The fact that we recovered back above it, it still leaves the risk higher. And that's kind of where I was yesterday. Hello, isn't December rate hike priced in till now? Amen. Yes, it is. That's what I was just saying. So that the markets are firm, aggressive on a December rate hike. So the risk, Eman, is if that we see inflation come in weaker than expected, there's a major interruption to growth or something like that, that might hamper the Fed's sort of willingness. It doesn't necessarily mean they won't hike, but you might see the market start to scale back expectations a little bit, maybe to 80% or 70%. They're literally at 91% right now. So if that were to happen, that puts the risk and the emphasis on possible weaker move in the dollar. Eman, does that make sense? All right, you got it. So with regard to dollar CAD, again, the focus really, just to bring you back real quick to the weekly, is what happens today on BOC. Even if this thing were to stretch up into 129.27, you have the objective yearly opening range, which we broke here in the second quarter, and then you have the 50 line for the current descending slope, and of course that 50 line was pretty close to catching that low for the decline. So, that's the risk. It's still for a little bit of a move higher. I do have some resistance targets again on the intraday charts we'll look at in a moment, but the focus is if we close again, as long as we stay above this median line, I should say, this trend line from 2012, the risk is for a little bit more of a draw higher. So what does that look like on the daily charts? Well, the daily charts also leaves that same sort of assumption in play. Whoops, this is the intraday. Here's the daily. What I highlighted earlier in the session is that this thing's coming off of a near-term resistance target. That level is defined by confluence region of the 2016 low day close. Okay, that outside massive reversal day that we made back in May, called the yearly low. The close of that session came in right at 127.23. A basic 38.2 retracement of the yearly range also is right there. Okay, so we came right into that high. The overnight high precisely was 127.22, so literally a pip away. And we pulled back a little bit. Just above that, there's this confluence region. This is the high day close for August, okay, right here. And then just a real near-term slope, just off the support of these two reference points, take a parallel, extended off that high, caught these highs really well, and both of those basically converge on the August high day close. Okay, just above that, the August high comes in like a couple 20 pips higher, but you get the picture. Okay, so you tagged initial resistance, you pull back, you could get a little bit of a stretch higher, but basically into the BOC, the focus is if you get exhaustion push into this, it might be a near-term opportunity to fade. We're coming off the back of a 5-day rally as is. This would be the 6th consecutive days of topside move, or this would be the 5th. So just be careful. Just be careful here. I'd be looking again for possible exhaustion push back into that August high day close. The intraday charts continue to further highlight that region of resistance. Here's what it looks like near term. Okay, so I kind of have them all labeled for you here, and this is what was on the update last night. Again, we basically tagged that and pulled back. There's that key region. A look at the 120. This is what it looks like now. So we just, like I said, it's been a slow grind higher. If you haven't gotten in, it's probably not a good idea to search for long exposure at this point, but 127.23, then 127.57, and 127.78 is the actual August high. So this is kind of a region. I don't know why my marker got lost. This is kind of the region that's highlighted here. On a stretch, if we were to rip higher, I'd be looking for a possible opportunity to to scalp that to the short side against that region. If that breaks, you literally have almost 100 pips before even the next soft target. That's at 28.60. Okay, so very interesting setup. I'm very interested to see how this reacts today at the BOC. Again, no changes expected to the benchmark interest rate. In fact, they're not really expected to do anything for the remainder of the year. So kind of the commentary is going to be the focus there. Questions on BOC or anything we should be looking for in dollar CAD? That's on tap about 10 o'clock here in the US. All right. Clear levels on that. See how this pans out. Near-term support, by the way, former slope resistance, and that's basically what this is. Oops, let me take it to the daily chart. This longer slope that we've been talking about for since the yearly highs. That slope converges on the objective monthly opening range. Okay, and then that also converges on that longer-term 2012 trendline support. That's the one that's on the weekly chart here. So all of that region lines up right here. Basically 2570 to 2597 is the near-term bullish invalidation. Okay, that's the level that we need to give out on the downside for us to get straight up bearish on this again. If that being said, any short exposure, even if it does reverse, those are certainly where you'd be looking to book most of your profits. If not take your stop to break even at least on a short side move. All right, dollar CAD number 2. Let's move on. Kiwi, also one that we highlighted last night. So I was looking for a little bit of a bounce here to try to get back in on the long side. I noted the 50% retracement was 68.97. You had the 618 line of this current low, descending median line formation. Nice little confluence region there. And, you'd look for a little bit of bounce. You still want to get back on the short side. You had an outside day reversal yesterday, right off resistance, former support, keeps the focus lower. Kind of need a bounce to be able to get back in, okay, to avoid chasing this thing. Well, near-term charts look like this. You had some divergence into the low, and that's another reason I was thinking, okay, let's look for a bounce here to try to get back in on the short, initial resistance 69.70. It was a pathetic. It kind of did give a little bit of a bounce, but nowhere near the recovery I would have looked for to get a decent stop against the weekly high. So it did break lower, hasn't reached our next downside target just yet, but we are close. Here's what it looks like on the 120 minute, and here's what it looks like now. Boom. So, daily chart, again, just to highlight the critical nature of this key region of support, nice little confluence. The big level we need to be mindful of now on the downside, like I said, is this region right here, 68.49 into 68.28. 68.28 is the 2016 open. Now, typically, you might be thinking to yourself, well, Mike, is the 2016 open really relevant in 2017 trade? And I would say, typically, yeah, it's not really relevant. Typically, for the open of 2017 trade, this deep into the year, I'm focused on the 2017 open as a level of possible resistance. But an objective look at price going way back does note some pretty interesting action at that 2016 open. Here it is, offered some support, offered some resistance. The break saw acceleration, came back, tested it as support. It almost caught the yearly low, okay? And it's a level that I still want to keep an eye on. That being said, the 2017, this year's low day close, comes in just a bit higher, and that's what gives us the range of 68.28 into 68.50. Okay, look, on a daily basis, this thing is deep into oversold territory here. This is not when you want to try to fight this. I do not recommend any type of, even acute type of scalp to the long side, just not worth it on this one. You really want to see this start to recover. So the focus does remain lower, and this is the key support zone that you want to focus on for Kiwi. Here's what it looks like on the intraday charts. So here's the median line formation that I presented last night. This line that you see here is the 618 of the range. So if you just adjust your pitchfork and drop a 618 in there instead of the 50, you can see that in fact the 618 caught nice resistance here, and the support side it caught nice support here. Looks like a nice little bounce here, and this is why I was looking for a little bit more recovery. Ideally, a move into like the weekly open would have been great entry. But shoulda, woulda, coulda, right? Market didn't do that. We're heading lower. Now the focus is really on that downside zone between 68.28 and 68.50. If you're holding short exposure, your stop should be basically against the Asia high. As long as it stays below that, I think you're okay into a drop into this region. If you're not holding any exposure and you're looking for a fresh entry on this one, you got to hold on. You got to hold on and wait for now. Look for a reaction down at that 68.28 level. If it breaks through just lower, you still have the lower parallel. So I don't want to get too excited. But these are sort of initial areas of which, if you're holding shorts, you look to want to start to peel off some of those levels heading into that lower parallel. Questions on Kiwi? Going once, going twice, sold. That is Kiwi number 3. Sorry, Michael, my question came late for dollar CAD. No problem. If no changes come out of the BOC today, doesn't that mean dollar appreciates? Why are you making assumptions on dollar price action from the BOC? So you'd be looking for CAD, right? If we see a little bit more of a standstill, let me go back to this. So you can envision a scenario where the Canada holds. It's a little bit more like hawkish commentary though, because they're holding, and this thing rips higher just on initial weakness on the hold, and then, I don't really care what they say, to be honest with you, man. If there's no major change to policy, it's gonna be just about market emotion, how they react to it. I would still be looking for some sort of exhaustion into this region near term. Does that make a sense? Man, I mean, the markets aren't expecting a change, and if they don't, you might not even see a big reaction. My emphasis is, a lot of these times what they do is when they hold, they want to leave the door open moving forward. So they'll come a little bit more of a hawkish slant in commentary while holding rates. Typically that we'll see a little sell-off in the asset or the currency, the corresponding currency, and then it starts to appreciate. They start to pad it, saying things are improving, we stand ready to raise, and yada yada. Remember, again, the pressure is for them to start moving too. They're kind of following the Fed's guide, if you will. So honestly, if they don't change, I'm not really expecting anything major as far as a major shift. I'm looking at price. My focus will be on price. It always is. I just want to be around when that happens. At the end of the day, we can't foresee what they're going to say, but we can know what levels are important. And on a fade into the August high, if that does sort of offer a spike, pulls back, wait for the closest recovery you can get with a stop against that, and you try to short it. That being said, Eman, the one thing I do want to say is, if we just plow through this, okay, on the release, at that point, you want to still buy pullbacks. You know what I mean? It's still going to be dictated by what price action does around our key levels. Okay, especially in the face of no major policy shift, which is what's expected. So I hope that answers your question on the Bank of Canada. Okay, so we did dollar CAD, we did Kiwi, that was number 3, excuse me. Number 4 here is dollar yen. Dollar yen looks like this. Where's dollar yen? Here it is. So we kind of briefly discussed this yesterday. Here is what dollar yen looked like last night. If you guys remember on the Sunday update, I just threw on the daily chart as we were gapping higher above this key region of support, and we noted a constructive outlook while above 113.42. We did dribble lower, okay? 113.25 was the low, and that held, and we came right back into the weekly open, and we're checking the weekly opening range high. So, let me say this. If you go back to the 22 update, okay, where we were talking about dollar yen, the gap higher, typically we always talk about the gap fill, and a lot of people are automatically, hey, if it gaps on the Sunday open, shouldn't I be looking to fade it? Sure, but that doesn't necessarily mean it's going to change direction. So I wasn't too surprised to see the breakdown to fill the gap, but a gap through this kind of confluence resistance, as I said on Sunday, kind of leaves the room open for a little bit more of an advance. Now you're still coming into a major resistance at 114.36 into 114.60. What is that? Well, It's the highs that you made back here in May. Same region caught the highs in July. And it's the 618 objective retracement of the decline from the yearly highs. This takes into account all of 2017 trade. The break, the level that we gapped above, not only was it the objective monthly opening range high, but it was also the median line and basic trend line resistance. So inherently, the range and focus is right here to start the week. And that's basically what the market's doing. It's still holding that same range. 618 retracement and that monthly opening range highs, again, on a close basis, 113.42. Now, added from Sunday's update is this near-term slope. This is just a basic parallel for the same exact operative slope that we're working with. And again, further highlights this near-term range, 114.29, 114.36. Okay, and here's what it looks like on the intraday. And here's what it looked like last night. So, I think Jamie's still on the right course here. I kind of did want to see it hold below the weekly opening range highs, and it probably got stopped out there if you're holding that short from the swing side of things, but it's still holding this parallel and just higher as 114.36 into 114.60. So I'm, of the mindset that this thing still could travel, push a little bit higher into that zone. And that's where you look for the reaction. That's the make or break level. If that gives out, there's nothing till 115.51. Okay, the 618 retracement way up here. So that's sort of my mindset right now in dollar yen. Don't have anything on it. If it spikes into 114.36, 114.60, I'll be looking for some exhaustion there. If it plows through that, you want to buy pullbacks into 115.50. There's a lot of room, over 100 pips to the upside. Can we short now with a stop above 114.60? You could, Rizwan. You could do anything you want. Would I personally? I don't trade that way. Okay, because you're essentially, Rizwan, that's a very it's a risky habit because you're basically trying to call the high in price. Price could go right into 114.63 and move right off, right? Wouldn't that be a shame for us to get stopped out on something like that? So what you want to do is when price is coming to resistance level, when you're trading counter trend, Rizwan, which is exactly what you're doing, right? We're trading counter trend. No one's going to argue that this isn't a downtrend by any means. You want to see some conviction that price is in fact seeing exhaustion before you do that. So what does that mean? On a very near term, I want to see price spike into that region. Failure, you got to wait for that high to come in. Then a retest. On the retest, that's, Rizwan, where you want to go for, okay, let me try a short at 114.60 against the high that was just made. I'll never try to short into resistance with just kind of looking for a high, against a target I've drawn. With the swing setup, you have a lot more flexibility because your stops are much wider, our targets are much wider. So you have to it really depends on how you're looking to approach the market, Rizwan. From my standpoint, on near term, because I'm only looking for a quarter of what the average true range is on any given pair, I want to see the high put in first before I start to counter trend trade. Rizwan, an entry like that would make sense if we're trading with the trend. So if this thing, for example, was if this was the weekly open, okay, and we broke resistance, but you didn't get a chance to get in. On the pullback here, yeah, I could put in a limit here with a stop against the low for the week. That's something I'd be willing to play because the broader trend is to the upside. But trying to call a high on a trend that's moving higher by putting a limit and just putting a stop against resistance, that's tough. That's tough. And I'm just telling you over time, Rizwan, again, just from experience, that's the way I look at it. I mean, it might work once, twice, 3 times, but in the times that it doesn't, it kind of hurts pretty bad. Make sense? It says thanks. Hey, you're more than welcome. Good question, though. Good question. To put things in perspective, if I was looking at things in that regard, Rizwan, let's say this region didn't exist, and just this is for example purposes. Let's say we were at resistance here, and we just made that tag. Yeah, I would jump into like a 10-minute chart, look real near term on a move like this. If we break the low, you could take a short with a stop against the high. It just so happens that this high isn't really at resistance yet. So I'd rather see us try to draw into that region. All right. Okay, that is dollar yen number 4. I'm going to pick up the pace here a little bit. So, pound yen, beautiful play. This is a setup that we highlighted the day previous on the 23rd. Here's what pound yen looked like. The daily chart is pretty clear. We were starting the week testing monthly open resistance. Last week we came off nice near-term confluence support. That is 147.86. It was big region, but this is dollar yen, sterling yen rather. You always have to remember you're working with a larger ATR. So we came into that region of support. You had the parallel there as well. Really nice rebound. Took you right into near-term resistance at the monthly open. So the focus to start the week was look for some sort of near-term pullback to get long. The long bias stays constructive above 148.42. Same start, top of that range that we talked about. Which was the previous high day close, by the way. So we start to look for some support there along the parallel on a pull lower. Initial support 149.20, a little bit lower 148.40. Both levels of interest for longs. Break of the high, you're looking for a monthly opening range 150.96 and 151.95. I think was the last target. 151.95 to 152 is the last target that I noted. So I mean, I don't know if you've seen the chart today. This thing plowed right through all of those. So here's the daily chart. The beauty of the move was, or here's the 240-minute chart, excuse me. The beauty of the move is that it came right into initial support, 149.20, and that held. Didn't get the pullback all the way into slope. The break of the upside is objective break of the weekly opening range highs. Keeps the high focus higher. 150.96 blew right through it. There's that next target, 150.95 into 152 coming up on tap to the upside. So nice move here in, here's the 120. Give you a little more perspective on how it looks near term. Nice move here in pound yen, right alongside the levels. So basically what you saw is boom, hold right here, break of the high, check that level, next level of interest, just higher, 152, just below 152. Now, again, keep in mind that the median line converges on that later, okay, basically into the close of the week. Just ahead of that, I would be mindful just of that near-term resistance level at that median line, 150, 150s, 150, 155. If you're holding longs, it might be a region just start cleaning up a little bit, take a little bit off, bring your stop to break even or better. I wouldn't be surprised to see another drop into 50, 60 as support before we move higher, but the objective remains constructive, basically above 50-50 right now. Questions on pound yen? So, by the way, pound data, really quick, just to go over, the how that looked. Here's what the data looked like for the UK GDP figures. Looking for a 0.3. They was looking for a hold on quarter. It came in at 0.5. Year on year came right in line with expectations. So pretty decent across the board as far as the data is concerned. Even you saw business climate expectations, all that stuff beat current assessment. So it's a little bit more of a constructive pitch today for that sterling data. Really put a fire under the sterling's belt. Best performer, like I said, into the U.S. session. So heading into pound yen and pound Oz that we're looking at, keep in mind that we are coming off of a nice data stretch here. So could see some near-term exhaustion as we get into the U.S. Open, but largely we're still remaining constructive on both of those. That's pound yen. Pound Oz looks like this. And again, here's pound yen, by the way, on the daily. Just keeping in mind, again, that 50, just below that 52 level, you start to run into some trouble. Then pound Oz looks like this. Okay, the best performer, obviously, of the pack of the pounds that we've been crossing or that we've been following this week. The major focus here was the outside day reversal off support that we got last week. We talked about this briefly. It's the 100 and 200 day moving average cross right there. We turned just ahead of it, almost just a kiss of that to 100 day before we reversed. Outside day reversal right back above 67.90. Remember, this is the level that we want to see hold. It's the objective monthly opening range low. It's an objective 38.2 retracement of the advance and the median line. Okay, three-way confluence. So once this broke and closed lower, honestly, that shifted the focus lower. The outside day reversal sort of refutes that break. You obviously just highlight that as a false break scenario. And now we're breaking through not only the former swing highs, but the monthly opening range high. Now, the last level that I had noted for you in the report there was 71.19, which is the 2017 open. Okay, here's what the chart looks like on the 240 minute. I know this might look a little messy, guys. We'll drill down in a minute, but just to kind of give you a brief overview. Here's pound dollars on the 240 minute earlier in the week. So we want to stay focused, constructive above 67.92. Once we set the weekly opening range low, we shift that up to 68.36. And again, this was a big region of resistance. 2017 open, a basic 618 retracement. And on the near term, for the new slope that we added yesterday, the upper parallel was right there as well. Okay, so like I said, this was the last target noted. What I wanted to highlight, my point, is that you're still coming into near-term resistance on the daily now. So the soft target you see noted at 72.57, just ahead of that, you have this slope line, and it's easier to see once I clear out some of this junk. Make this a little bit cleaner for you. And take it into the daily chart once more to show you this. There's that slope. So we have the September highs right there, slope resistance. I wouldn't get too excited just yet. Okay, 73.32 would be like an initial target on the top side break, but I'd be cautious about chasing this up here on pound Oz. Near-term support, look at that same range that was former resistance. The monthly open covers that just lower at 70.55. That's kind of where I want to see price hold above if this immediate advance still has legs. But remember, objective, despite what Mike Boutros thinks or anything, this broke above the monthly opening range high. I want to see a close above that to confirm that break. Also, note that the reason this region was so critical to us is because we were watching this 2015 trendline resistance. And that came right there as well. So if we close above this region, guys, it does keep the focus higher. Okay? Also, note from a momentum standpoint, what do we want to see in strong uptrends? On the pullback, we want to see support ahead of 40. And certainly that's exactly what you got here. Nice bounce ahead of 40. Well above 60 here again on the thrust. Even the momentum profile still looks somewhat constructive in my standpoint. Questions on pound Oz? Again, a big swinger, larger ATR, but plenty of opportunity here. At this point, you can kind of scratch that 618. And those are your levels to the upside on a breach. Okay, going once, going twice, that is pound Oz, number 6. Number 7, I'm just going to really quickly breeze over this one. Dollar peso, again, let me know if you guys are trading this or not, but it looks like we're finally getting a reaction at that resistance level that we highlighted earlier in the week. It was basically 192020, 2019. It's sort of a big region I wanted to see hold as resistance. You have former swing highs, a basic 38.2 of the entire yearly range, and the 50 line for that long-term slope we've been following. We also noted that on the rally here into that region, you're getting ongoing divergence. Price action making a series of higher highs, the oscillator making a series of lower highs. So it does suggest, again, could be nearing near-term exhaustion. A look at the intraday charts has us right here, again, testing that median line to the upside. And even here, again, seeing divergence on both of those peaks. So on a recovery, if we were to see this get a little bit more of a pop higher back into the US trade, I'd be looking for failure well ahead of this high. Any stops you take should be against this high for the downside play, and that's going to also remain our near-term bearish invalidation level. So I am looking for a little bit more of a turnover here in peso. That gives you 1, 2, 3 touches. Okay. And it's too early to tell, but let's say it does turn. inherently the first sort of objective look I'd have is on a retracement of the near-term advance, just to see where those retracements come up. Okay, nice former swing highs here, nice pivot. So if we were to see this thing break trendline support, these are the initial targets you would look for. All right, it's too early to leave that on because you have no conviction of this being a high yet, so I'm going to take it off. But objectively speaking, it does look vulnerable for a near-term turn in peso. That's number 7. Any questions on that trade? Okay, a quick, let me go back to Aussie before we jump into the commodities. Here's what Aussie looks like. Obviously, some pretty disappointing CPI data in overnight trade. Again, here's what the data looked like last night. You're looking for CPI. We were expecting a pop to 0.8% quarter on quarter from 0.2. It came in at 0.6. Year on year CPI headline figure from 1.9, expecting a strong print to 2, down tick to 1.8. And again, core year on year, expecting from a 1.8, we're expecting an uptick to 2. Again, came in at 1.8. So it's just a weaker across the board print. And obviously, like I said, Aussie is the weakest performer heading into the U.S. trade session. Something to keep in mind. Worked out for us because we've been pretty bearish Aussie from the start. Here's what Aussie looked like at the start of the week. I do want to bring your attention again to the weekly charts on this because it does look just phenomenal, and it's something that we've been waiting for a while. We've been talking about this huge region of confluence. It's the bottom end of the range is 76.30, but the top end of the range comes in just lower from where we are right now. I would say 76.60 into 76.30, massive support or a huge critical inflection point. So looking at this objectively on the weekly charts, again, you can see the pullback here. You have basic trendline support off those lows from May and June. Okay, or this was actually the two May lows. You have the consolidation resistance, which was a 4-point touch. 1, 2, 3, 4, 5. The break saw acceleration. So that slope is verified. That comes up on the top end of that range. An entire 38.2 retracement from the advance off that 2016 low comes in right at 76.29. And a basic 618 retracement just to the near-term advance from May, also 76.32. In case that wasn't enough, the 52-week moving average is right there as well. So once we kind of start to break down here, this is my sweet spot. This is, for me, a critical zone of support. So yeah, everyone's starting to all of a sudden now get super bearish. So it's kind of, I do still think you have downside room, but don't get too excited ahead of 76.30. That's, on a short play, that's the maximum limit. That's where most of my limits would be. If we break below there, you have the downslope just off the basic lows from 2016, and that comes down, basically around 74.50. I want to see where the 50% retrace would come in. Right there. So the next downside break on the weekly, if we were to break, would be down here. 50% retracement of that range comes in right alongside that trendline support. But that's an if-then statement, right? The focus right now is on a move down into this support zone. So daily charts, look like this. Okay. And again, that initial 77.95 level was sort of the support zone that we were looking for. Confluence zone just lower, the break below there, and this is the pocket you're looking for. Interestingly enough, that's the same levels we're talking about on the weekly chart. Look what's there, 200-day moving average. The 50 line of the current descending slope. And again, that basic trendline support just off the lows. Same exact region. Okay, the 200% comes in a little earlier at 76.90, but 76.30 into 76.60 still going to be that key zone of support. Near term, intraday, here's what it looks like. So the 240 chart, pretty clean on the median lines. Nice bounce off that 50 line earlier this month. Rally failed ahead of the 50 line on the upside. Again, a raised ceiling, typically a sign of exhaustion. You saw a nice momentum break trigger there. Came back, couldn't even make a run of those highs. Opened up the week saying, look, we got support right here. These are my favorite plays. 100 off the high, 618 off the low. Gave us a nice little support zone here. It held as the weekly opening range low. The break yesterday, again, really confirming the downside move, taking out targets below the 2016 high day close, and just lower is that initial zone of support, 76.70, and again, there's that 76.30 zone. All right, so how do you play this? If you're not already short on a rebound, I would be looking for an entry somewhere here, if possible, or exhaustion somewhere here. If this were to rally all the way back into the November high, that's going to be my near-term bearish invalidation level. So we'll drop that from 78.34 at this point, right down to that 77.79, 77.78 region. And actually also at this point, we can scratch those levels. All right. Questions on Aussie. An odd one, the 2618 extension off the 10 October and 1019 highs is 76.75 on the 1 hour chart. Is that just the extension I just deleted? So you're looking at this, Pooja? 76.75. Oh, you have the 2618 you're saying? Yeah, 76.76. Ooh, look where it comes in. You know, nice moves. Well done. Let me do that then. You know, I'll leave this 618 actually on because it is the objective weekly opening range high, so it's a level worth keeping an eye on. This 618 retracement is null and void. We've now broken that low, so that we don't need to have there anymore. And we get rid of that 1618. Boom. Nice. Looks good. Looks good. So ultimately, I do want to see 76.30 if possible, or 76.60, and I do want to see actually exhaustion there. I think that'd be a nice spot for this to give us a really nice rebound. Aussie dollar didn't give us a rebound to 78.30 during yesterday's economic data release. Was confused to hold short at 77.80. If our level which we are looking for to jump into a trade didn't come out, how can we play the trade like that? Stay flat or jump from the day's highs of our bias in short term? So great question, Eman. I can't really go into too much detail today because we're kind of late in the session here. I still have more to go through, but very good question. And this is what I'll say. 4 out of 5 times in that scenario, if it doesn't get the bounce we're looking for and it just breaks down, I have to sit the trade out. Capital preservation is everything. You know, we're not trying to take a gamble mentality on this. So even if I'm certain and I'm like, oh man, this thing's gonna break down, yeah, man, sometimes you can jump into a trade and chase it, but that's not having good risk management. And like I said, even if it works once, if it works twice, on the long term, you're gonna get stung real bad doing stuff like that. So to answer your question, session highs are a good thing to trade against if you're looking for a really near-term position. On a trade like this, if we get exhaustion near 77.50 on a rally higher, let me say this. Ideally, it rallies back to the median line and then pulls lower. But initially, this would be a zone I'd be looking for possible resistance. Like I said in the earlier with Rizwan, if we were to rally into that, see a pullback, then I'd be looking for a stop against that high. Or if we were to rally into this region, I would actually have a limit up here and a stop against the session high. Yeah, that's a good way to play it. But from here, you know, it's hard for me to advocate doing anything. I definitely don't want to try playing the long, even though I think it might rebound. I'd rather be looking for that long, for that bounce to give me a better entry on the short. Eman, does that help? Does that make sense? But 4 times out of 5, if we don't get the bounce and it just breaks lower, I'll just sit it out. Always live to trade another day. Now, with regards to your trade, if you're in, Iman says to the maximum, like always. Cheers. With regards to your trade, I don't know if you meant that you're holding a 77.80 short. If you're holding a short from 77.80, at this point, if we start, this is what I start to do. You look into the much closer near-term charts. If you start to see momentum really shift, and let's say we break through, the initial opening range for the U.S. session, then I would have at least my stop at break even. Ideally, when you start to see this, amen, if you're in a scalp, I'm not talking about a swing trade, I'm talking about like a near-term scalp where your stop initially was 20 pips away. When you see a trade like this where momentum is just waning, once it breaks it back above 30, and specifically once it tests 30 again as support and holds, for me, that's typically, your the epiphany of an exhaustion trade. So that's kind of a scenario where you want to kind of just bail on it. Anyway, I digress. Okay, Aussie dollar. I got to kick it real quick here, guys. So real quick, I just want to go over crude. Crude did see a near-term break for the topside range. Again, you know where I stand on this. I do think it moves higher. We've been getting some divergence and not really a very convincing momentum signature on the rally. But it's still kind of a trade. If you put a gun to my head, I still think you look for that rally near 53, 80, 54. So no change. You basically want to keep your bias or focus higher above the opening range low for the week. That now converges on that parallel. And downside break there, you might see a big spill in crude. But as long as this holds, you're just testing a big resistance level. You need to see that break to get that topside stretch. Okay, so crude, I do think you possibly see him move higher. I want to stay constructive above the monthly open. That's number 9. Number 10, Swissy, another one I'm not involved in any longer. We tried to, this thing just keeps heading into resistance and breaking through each level. You guys recall I got stung on this trying to get aggressive on the short side with that final break last week that took us back above it. And even though we were moving higher, I still was very hesitant. The weekly chart did highlight a near-term resistance right there. I want to see how today pans out or how the week pans out. I don't want to do anything anymore. We broke over the 52-week moving average, 50% retracement, median line resistance. The objective double bottom measured move, like I said, still takes you into 101.07, 101.08. So I'm not really interested in dollar Swiss anymore. It's become back on the abomination list here. But again, if you feel compelled to, to trade this, you are constructive above 98.13, basically the 200-day moving average. Nice confluence region there. So Swissy, back on the list of abominations. Gold, really quick, here's what it looks like on the intraday because we've been following this one. Kind of fizzled out, divergence into the lows. Look, if we break back above the monthly open, see a recovery back at 1284. And again, a break there would kind of put me more on a constructive path on gold. Remember, we're largely constructive. The whole thing that we've been trying to gauge on this is how deep the correction goes. So you're seeing that we can't close below the 100-day moving average. You're seeing divergence momentum. That's the break that would put you back on the top side move. Watch that in gold. That's 11. Last two I need to cover real quick with you before we go. Euro and Euro Yen. Euro dollar looks like this. Look, the range is the range. Respect it. We got to clear something here. The risk in my mind is still for a near-term drop into the lower parallel. The daily chart, okay, on a daily close basis, this is still critical support. The monthly opening range lows, a 236 retracement, the 100-day moving average, and the lower parallel. But the near term, and I noted this yesterday, if we are just playing, correctionary play here, you still have the possibility for a drop into this zone. I'm not going to fight it. I'd either be interested in longs from down here, or if we break that slope to the upside, a pullback and longs from there. I got nothing to do here. ECB's on tap tomorrow, guys. Major event risk. You're likely to see a lot of volatility. There's a whole bunch of things in the air, and the expectations are really all over the place. And those are the ones where you can get the biggest reaction in price. So just always keep that in mind. If you're not currently involved in euro, my humble opinion, it's worth one just kind of sitting out to see, how that data pans out tomorrow. Questions on euro? Okay. Remember, the longer story remains constructive here. So, for me, I'm looking for either a big drop into support or a clear break of resistance to get on the long side. Last but not least is euro yen. I just highlighted the daily chart for you early in the week just to kind of put you in perspective of where we are in broader focus, and we're trading that level right now, 134.28. You have the upper median line parallel converging with a 618 retracement of the entire decline off the highs that you made back in 2014. And certainly that, for me, is the focus for today. If we are able to make it through on a closed basis, sayonara. You're looking for 136.23, you're looking for 140. If we fail below here, you could see a little bit more of a downside thrust. I'm more inclined to say that we probably get the topside break at some point, just based on the fact that we've objectively cleared the monthly opening range. Almost basically came back and tested as support and pushed higher. To me, that begs a late month high, so I would be looking for a little bit more of a push higher. Rizwan, where should we look to buy on gold? So for gold, bring that chart back on the intraday. If you're looking for long exposure, like I said, I would be looking for either a breach above the weekly opening range high and a pullback to buy, or if we were to make another low into that slope resistance, if you can get a stop against this low for a scalp, that would be your play into the weekly opening range high and beyond. You can't do anything here because you're sitting right in the middle of the weekly range. Always keep it objective, guys. Where are we in the middle of the week? Here's the weekly open. Here's your weekly low. Here's your weekly high. You're right slap in the middle. I'm not going to take a high because we're testing near-term resistance. I'm not going to take a long, rather, because we're testing near-term resistance. And I'm not going to short it because there's all kinds of divergence happening, and it looks like it might reverse. So a breach above here, wait for the pullback to get long against that region. Or if we move lower, failure at that parallel, stop against the low would be a play to try to play the rebound higher. Make sense, Rizwan? All right, and that is euro yen. We talked about that as well. So watch for near-term exhaustion here, or if we close firmly above this region, this is an objective break of the yearly high day close. We already made a break above that, the yearly high close, the 618. Big region here. Want to see what happens into close for euro yen. All right. I hope I didn't regurgitate too much at you all today, guys, but we're going to wrap it up there. If there are any other questions or trade setups you want to review, stay tuned. You got Jamie, who's going to be coming up at 11 o'clock a.m. Eastern for the midweek strategy webinar. I'll go over his outlook on a little bit more of a broader prospects, longer-term trades. So do stay tuned for that. We'll be back here tomorrow on the wake of the ECB interest rate decision. So keep your ears tuned for that. Hope to see you tomorrow morning. And with that, I'm going to go ahead and close up the room. Have a great day trading, guys. See you tomorrow. Cheers.